It's time to make that money, family. This is what the last week of the year. I know a lot of you guys will be going out partying this weekend. We understand December 31st is Friday. The New Year is on Saturday. But it's time to make some money. Even before the New Year comes in, when you accrue new taxes, when you guys are going out and buying your investment, this is the time to make money. It's always time to make money. Doesn't matter the day, doesn't matter the hour, doesn't matter the month, doesn't matter the time of the year, doesn't matter the holiday season, when October and Thanksgiving and Halloween and Christmas and New Year's, it doesn't matter. It's always good time to make some money. Does not matter at all. So let's get into it and let's get into making some of this money. Well. Here we go, ladies and gentlemen. So we're going to talk about GoDaddy today, but I'm going to compare them slightly to AWS, Amazon Web Services, as well as Google Cloud Platform. A lot of you may not be familiar with Google Cloud Platform, but Google Cloud Platform is making headwinds. They're essentially catching up to AWS, as well as AWS is catching up to GoDaddy. But let me just tell you right off the bat that all of these are great investment for your portfolio, okay? Because they deal in so many sectors, especially when you're talking about Google as well as Amazon. But you just want to invest in a cloud computing platform or website domain registrar or builder like GoDaddy, then all of these for you would be great for your portfolio. And I think there's time for us to really make some money. So without further ado, let's get into it. So over the past year, GoDaddy has been up negative 7.46%. All right. Because we understand that this year, a lot of stocks have been doing bad at the end of the year because of the holiday season. The past 3 months, GoDaddy has been up roughly 11%. The past month, around 18%. The past week, 13%. And today in the pre-market, we're looking at 3.42%. Ladies and gentlemen, these are all great stocks for your portfolio that you guys should essentially go in. Whether you're going to buy whole shares or invest in dollars and fractions, or whether it be options when it comes to call options and put options. Nonetheless, all of these are really, really well for your portfolio. Now, if you guys are not familiar with GoDaddy, GoDaddy has been around since 1997. I wasn't even aware of this, but they have been really building their brand and doing very, very well. They have roughly around 7,000 employees. And if you wanted to buy GoDaddy, just for some fun here, the market capitalization is 12.6 billion. Let's round up to 13 billion. So you would need $13 billion in order to buy GoDaddy. Very, very important. Okay, let's move down. The analyst rating around 15%. Okay, of the analysts, 15 analysts on Robinhood, stating 73.3% buy at 26.7 hold at a zero sale. Phenomenal. That's absolutely doing great. Now, Q1 of fiscal year 21, GoDaddy was down. And as we're looking here, GoDaddy started to increase and rocket up in Q2 and Q3. And right now they're slightly down, but nonetheless, this is the time that you buy. Other competitors in this particular space is Microsoft, Salesforce, and PayPal, but of course, Amazon and Google as well. Let's move on. Now, Yahoo states that in the short term and long term, they're expecting for GoDaddy to go up, whether it be in the next 2 weeks to the next 9 months. They're expecting GoDaddy to increase in price. So we're talking about profit, okay? The amount of money that you invest, depending on the percentage that it returns at, that's your ROI basically, okay? So as I'm getting to this, we're looking at the revenue versus the earnings. So we understand that a lot of businesses doing this late part of the year, and this is trending analysis. It usually happens again around the October to December, where people are not investing as much. They're using their money for decorations and buying gifts, and they're traveling to see loved ones. This is normal, but this is the time where you and I, the investors, we go in, we take a couple $100, we take a couple $1,000, $100,000, whatever you have, and you start to buy up the stock market. You either buy individual shares, okay, or you buy ETFs where there's a basket of stocks within that particular fund. Nonetheless, this is a season to be investing, okay? That's why I'm so damn jolly. I'm not worried about people on sleigh bells ringing and sleds through the snow. I'm talking about these damn stocks in my bank account. I'm talking about stocks in my portfolio. So that's what I'm referring to, family. Let's move on. Okay. So this to give you a little bit of insight. When we're talking about website builders, originally I went with Wix, and about a year into using Wix, I did not like Wix. It was very, very difficult for me to navigate and learn how to do certain things that Wix had to offer. Now, Wix has a lot of integrated tools that you can use in order to whatever your website is essentially about. But GoDaddy was a much cleaner platform that anyone can use. Like if you're not even tech savvy, but you want to start a business and you know you need a website, I would probably tell you go over to GoDaddy before Wix, okay? Because I changed my platform from Wix to GoDaddy. So when you look me up, you'll see right here, you'll see Ross World, top financial consultants near you, okay? And it tells how it's one of the pioneers of financial consultancies in Dallas, and they cover everything from investment strategies to financial coaching, okay? And then you click inside my website, and here it is. You see financial consultants welcome you. This is Ross World, okay? That's my shiny face from my belly I'm trying to lose, right? And I've been doing in this field in the last, 10 to 11 years. And it's a very clean platform. And again, I told you, I changed my platform to everything is zero. None of this costs any money anymore. My CEO experts, I don't know what's going on, but they need to be fired because they didn't change my damn website yet. But nonetheless, this is Ross World Financial, okay? Very clean platform. I actually like it. The only thing I don't like is that they don't have my damn prices on there. Take them prices off. Everything is free. But anyway, let me move on because I think this could be a really good investment for you guys, but you may need a little bit more information in order for you guys to go ahead and invest in. Now, when we look at the projection and the forecast of GoDaddy, what we're looking at a medium price, okay, at a medium price at $93 per share. Currently, GoDaddy is at $76 per share. And again, for you new and novice investors, I do not want you to forget that you can invest $5 a month in this stock right here. Now, me personally, I remember I had a couple of shares of Google. I bought Google around 400 to 500. And again, I want you to learn from my mistakes. I know how important Google is to cloud computing, to software development, to tech innovations, and I sold my damn Google stock. And Google right now, I believe is what, $2,900 a share, but we'll get into it. But for GoDaddy, we're looking at a median target price of $93 per share and a high target price of $110 per share. Okay, that's the high target price within the next year. So there's a large potential of growth here, especially as a lot of companies are moving strictly to web-based. Okay, strictly to web-based. And they're looking at companies like Wix and GoDaddy and Google and AWS, so on and so forth. But what's important here, family, is that the amount of market share that GoDaddy has that I think a lot of people haven't really been taking notice of. They have a large share of the market. I'm just going to show you some of their companies here. So you have Paradigm Marketing Consortium, QED Systems, Atlas, and the Smart Group. You may not be familiar with these, but I want to show you the revenue of these companies. Okay, we're looking at 1 million to 10 million. And then last but not least, we have one that's roughly around $1 million. But when we get into the market share of GoDaddy, we're looking at 16.73% of the market share of website building. That's a large piece of the market, ladies and gentlemen, and they steadily growing. And we're looking at other website builders like Adobe Dreamweaver, Duddy, Adobe Muse, few other art and product. A lot of people are not using Adobe Dreamweaver, believe it or not. And if they are, they're using kind of like the bare bones of it. But people are steadily using the website developer GoDaddy to build their main domain registrar, which is very important. And they have a large market share within this space. Okay, let's move on. We're looking at how distributions of companies use GoDaddy Website Builder by the industry. So construction at 14,000. I'm not going to name all the numbers here. Hospital and healthcare, retail, restaurants, automotive, recreational facilities, services, and real estate, nonprofit organizations, civic and social organizations, and religious institutions, okay? And it says top countries that use GoDaddy website: United States, Canada, UK, Australia, India, Mexico, Singapore, Colombia, Brazil, and Spain, okay? I don't want to bore you. I'll move on. Now, as we talk about the market share of GoDaddy, I want to see who's the number one when it comes to the website provider and domain register users, as far as how do GoDaddy rank against other people within the same sector as well as in the same field. Important to know. Now, GoDaddy is number one. Again, they have 16%. This is old numbers here. They have 16% of the websites, okay? And it says here that GoDaddy boasts more than 77 million domains under management and 8,000 employees around the world, okay? 77 million domains. They've been in business for more than 20 years, ladies and gentlemen, okay? Now, if you guys want to use GoDaddy for your business, I advise you to go ahead and do so, okay? Now, here's some other information that you guys may want to look at. And for me, GoDaddy, believe it or not, is very, very frugal, meaning that it's very affordable for you to go and build your own website. But GoDaddy is definitely number one, okay? Number two, Amazon Web Services. Now, we saw GoDaddy at around 16%, and we're looking at Amazon around 9%. And then right after Amazon, we have Google Cloud Platform at 7.3%. Now, I'm going to go back up to AWS so you'll understand that AWS, they have that on-demand cloud platform, but it began as an in-house innovation retail giant that Amazon was using for their internal software. Now, of course, it extends beyond simple web hosting to power more than 90 services, including cloud computing, storage, networking, database, analytics, application services, so on and so forth. Moving right along to Google platform. It states here that Google Cloud compromised the public cloud infrastructures as well as G Suite and enterprise versions of Android, Chrome OS, and APIs for machine learning and mapping services. And you may not be familiar with Google Cloud Platform, but believe me, there's a lot of Fortune 500 businesses that are now using Google Cloud Platform. Other things to know: when you guys go out and vote and invest in Google, understand that you'll be investing in a company called Alphabet, which is the parent company of Google. Now, of course, Larry Page and CEOs and owners of Google, they did this for tax purposes, of course. But in this hierarchy, you have Google Class A stocks, and then you have Google Class C stocks. The ones that I believe that you should be investing in, it depends on what type of investor that you are, and I'll leave that for last, okay? Last but not least, I went over to Zacks. Zacks is saying that GoDaddy is at a 3, meaning hold those shares. C for value, A for growth, C for momentum, with a total VGM score of B. That means to me, you invest. Now, going back to Amazon. Amazon in the past year has been up roughly 7.5%. In the past week, Amazon has been up roughly about 3%, rounding up, okay? Now, as the lead cloud computing platform, Amazon Web Services is the primary profit driver for Amazon. And we talked about all the things that they provide. Now, let me show you some companies that Amazon are in bed with. Amazon AWS has been supporting Zoom since 2011, and Zoom is only getting better, okay? Netflix also uses AWS, as well as it was one more family. I had 3 of these up here for you. We had Zoom, we had Netflix, and I believe there was one more. And it said, who is AWS' biggest competitor? Of course, is a cloud compute firm by Google, okay? And Facebook is not using AWS, okay? But those are some of the huge companies that AWS is using. But a lot of times when people look at Amazon share price, when you look at Amazon share price, automatically people just get discouraged. Like, man, listen, I don't got no damn $3,500 to invest in one share. But again, ladies and gentlemen, I always tell you the money is in the percentages. It depends on how much money you invest versus versus how long you've invested that money inside that stock, times the amount of profit percentage that it increased and over what time period. This is very easy if you just take some time to understand what I'm saying here. Nonetheless, all 3 of these, in my opinion, are good investments, but it depends. I know some people really can't get around the percentage. They like, I want shares. You know, when I tell somebody, well, how many shares you have in Amazon, how many shares you have in GoDaddy, I want to give them a number. I don't want to tell them, well, you know, I have 0.3567 fractional shares of Amazon. Listen, F all that. This is about that money, and you should be investing in it, whether it be GoDaddy, AWS, aka Amazon, or Google Cloud Platform, aka Google. Okay, so let's move right along. Now, when we're talking about Amazon and we're looking at the price prediction of Amazon, Amazon is currently right around $3,500. I'm rounding up here, family. That's the low, right? They're already expecting the low. The median target for Amazon in the next 12 months is $4,000. Now, the high prediction forecasted amount for Amazon in the next 12 months is $5,000. So essentially, if you had one share, just one share of Amazon, there's a potential for you to make $1,500 off your investment. $1,500 on your investment. That is astronomical returns of your investment, ladies and gentlemen. Now, a lot of you are starting to get your tax returns late January, February, March, and some even in April. And I encourage you, right? My wife, for the holiday season, started a 5 to 9 college plan for our son, right? And we did the math, right? We did the simple math without compounding interest. By the time he's 18, it'll be $63,000, the amount of money we put in there. Now, that's a lot of money for someone to go to a community college, an in-state school, or, well, as he said, oh, I will start a business. When we asked him, hey, listen, what if you don't use this money for college? What would you use it for? He was like, oh, I would use it to start a business. Well, what type of business would you want to start? And then he started naming off certain business. He's 10. So you have to put these nuggets of information. You have to plant the seed in your children's mind, or even for yourself. Do something other than go buy things that are liabilities versus assets, okay? Like start a portfolio, right? Buy some call options. Nonetheless, let me move on. Let me move on to Google, because again, there's two types of Google. If you are a long-term investor, you want to invest in Alphabet Class A, which is also known as Google with the ticker GOOGL. Now, there's all these stock classifications, all these stock classes. You have A, and today we're talking about A and C. So the first ticker that we're currently looking at is GOOGL, which is the Class A shares of Google, meaning if you are a long-term investor, these are the shares for you. If you are a short-term investor or a swing trader, then you want to look into the other ticker of Google, which is GOOG, which are Class C shares, okay? They incur a little more taxes, but supposedly they increase and decrease, which I haven't seen. Both stocks has been consistent. So again, it just depends on what type of trader you are, of which stock you should actually invest in. Now, as we're talking about GOOGL, in the past year, it's been up 71%, the past 3 months, 5%, and then we're going to jump down to a week at 3.6. We're going to round up at 4%, okay? And then the other stock, which is the Class C stock, and if you notice, this per share is $29.41. This per share is $29.50. So the long-term investors are making more money. The long-term investors are making more money because if you're not a day trader and swing trader who that's simply what you do, or you have enough time in order to do so, and you do the provocation and mathematical equations of how many time I'm investing, how long it's taking me, what taxes will I incur, what is my profit, and then what is my net? What is my net take-home pay? Not gross. Like, man, I invested last year and I made over $100,000. Okay, what did you make after taxes? That's your gross. I need your net. Well, you know, I incurred a lot of taxes, so I only made around 60 grand. You paid $40,000 in taxes? Exactly. That's why I like long-term investing, where I use option trading as kind of my short-term investing in my day-to-day, so to speak. Moving right along. So again, you have Class A and you have Class C, okay? Both of them are still Google. They just different types of shares. Now, when I look at Google and the companies that they are essentially in bed with, we're talking about the big spenders here. We're looking at Verizon at $80 million, Twitch at $64 million. CenturyLink, $62 million. LinkedIn, $41 million. News Corp, $41 million. SAP, $40 million. Facebook, $39 million. Intel, $39 million. Yahoo at $47 million. And Marriott at $36 million. Those are the Fortune 500 companies. Those are the large corporations that are using Google Cloud Platform. Now, me personally, if anyone knows me, I have all types of Android Pixels, okay, or Google Pixels rather. I have Google Pixel Buds. I'm building my, what we call the ecosystem of Google. I know a lot of you guys have Apple. I don't play the whole tech war. Apple is better than Google. Listen, it's all investment. It's all about money. And of course, whatever phone you have is about your preference, okay? So as we look at Google's projection, over the next 12 months, it's already at its low at $2,900 per share. Let me go back. Let me just show you. Looking at $2,900 per share, $2,950 for the Class A shares, okay? And that's where we are right here. So the median target, they have it at $3,350, and at a high, we're just rounding up to $4,000. So essentially, at $39.25 and the current price of $29.50, you're looking at $1,000 of a return if you own just one share of Google. Now, don't be the fool like me. I bought in at Google around $400, I believe, and I sold Google when it hit 1,000, thinking that, I don't know what I was thinking at the time, to be real with you guys. I have no idea what the hell I was thinking. There was a lot of money I let go throughout the years because of bad investment, bad decision, not understanding the stock market, just putting my foot in there. But the one thing I learned, ladies and gentlemen, if you guys do not know how to invest, I can show you a sheer way of investing. Invest your money, lose your money, and I guarantee you'll learn. I guarantee your ass will learn, because I've been learning ever since. I tell you, that $10,000 that I've been beating you guys across the head with this entire year, I will never do a short-term option with $10,000, even if I had insider information. No, I would not. Good morning, Jermaine Anderson, Jerome Jones, as well as somebody who's spamming me. Ladies and gentlemen, happy Monday to you all. I know the year is ending, but this is the time for you to invest where stocks are at a fire sale and you have more money to be making in 2022. You guys have a great one. I'll see you on the next one. This is Financial Literacy 101. Learn money and be inspired.